Hello everyone, welcome to yet another weekly analysis. For this week, we'll be analyzing just two pairs, just two pairs and maybe the DXY. But for now, we'll be analyzing just two pairs, and it's important for you to be able to, go into the week, with the least amount of pairs possible. You know what I'm saying to you? Because by the time you start having, multiple pairs, multiple options, you would tend to over trade. That's what I'm saying to you. But when you've planned, just two pairs, to be executed for the week, you would reduce your risk of losing that which you've made. For example, you come into the week with say $5,000 in capital, right? And then you take the first trade and then it's a loss. You know what I'm saying to you? And now you know that the second trade should be great, or should, you know what I'm saying, should be profitable as you've planned it. You know what I'm saying to you? So now when you execute the second trade, you might then possibly profit, and then maybe get a 2 to 1 or a 3 to 1, and then you're back in the green. You know what I'm saying to you? Now, with this analogy, you can be able to destroy over trading. You just have to come into the week with the least amount of pairs possible. I used to come into the week with four pairs, four options. You know what I'm saying to you? I will have about four options, four pairs to trade. And then when the opportunity comes, I take a loss. I would execute the next pair. I will take another loss, because why? I am basically revenge trading. You know what I'm saying to you? But with constant failures, and with constant lessons and practices, you will be able to understand what works for you and what does not work for you. For me, in a week, I do not allow myself to trade more than two pairs, or rather I do not allow myself to trade twice. So more than two times. You know what I'm saying to you? So if I execute GPUSD on Monday, I have one more one more slot for another execution. After that, I'm done. You know what I'm saying to you? After that, I'm done. Now you need to understand that your trading plan does not stop you from making money. The first thing we come into the market with is not the ability to make money, or the mindset of making money. It's the mindset of managing that which we have. Then, whilst we manage, then money is made. You know what I'm saying to you? How do we manage it? By having proper risk management. You know what I'm saying? By having the right plan in place. So, notwithstanding, let us have a weekly analysis. Sorry, a top-down analysis. So, as per usual, we'll always start from the monthly time frame. The monthly time frame is the overall, is basically the overall, overview of the market. If it's bullish, if it's bearish, that is where the rest of the time frame should be flowing towards. In some sense, so on the monthly time frame, we are bullish. Now, it is not for you to think, oh, why are we bullish? We should be bearish. It's something to you. It is not for you to think and dictate the direction of the market. It's for you to follow where the market goes. If the market decides to be bearish tomorrow, GPSD opens on Sunday night, and it decides to be bearish, everybody's going to be bearish. That's what I'm saying to you. The market tell us what to do. We don't tell the market what to do. For now, the market, they're showing us signs of bullish movement. It is highly and heavily bullish. Why? Because we've broken the last structure. We closed above it on the monthly time frame, and now we are expecting to rally all the way to this price right here. That's what I'm saying to you. Now, the question is this: because everybody has an entry strategy, everybody has an exit strategy, but most people don't know when and where to expect an execution from. It is very important. There are many things you need to understand. It's something to you. That these are steps. The first step will be to where would I be able to execute from? It's something and then when I have my price of execution, how would I enter? How would I exit? It is important for you to have an exit plan in place. People enter trades, execute trades, and then they don't know what to do after. That's why most people lose money. There's something to you. When you enter a trade, you need to have an exit strategy in place. You need to tell yourself, if I see this, I'm getting out. If this does not happen, I'm going to keep holding. You see what I'm saying to you? Always have an exit strategy in place. The same way you would journal your entry, why what you see, and that will make you execute a trade. It's the same way you also journal underneath it why you should exit, and how you should exit, and where you should exit. You see what I'm saying to you? Now, moving forward on the weekly time frame, we have to first of all know what the market is saying, what the trend is saying. You see what I'm saying to you? I urge you not to start plotting lines, supports, or trend lines when you come into the market. The first thing you should be able to see in the markets when you open the chart is the trend. Do not go plotting lines, do not go plotting trend lines, fair value gaps or whatnot, or other blocks. The first thing you need to know is the trend. And the only way for you to know the trend of the market, the trend of the market is by market structure. You see what I'm saying to you? So you have to understand market structure. You have to live by market structure. Because market structure is basically just like the name implies, market structure. That is basically how the market moves. It's basically how to read the market. So market structure is king. You see what I'm saying to you? So market structure says right here that we are bullish. Why? Because we have not closed below the last low, which is this low right here. If I zoom in right here, you will see that we are still at we closed above. It is important for you to know this, that the market does not make mistakes. It's not going to make an error and correct itself later. No, it is the way it is supposed to be. If price closes above this last structure right here, it is because it wants to close above. You see what I'm saying to you? So now we've established that we are bullish. Now we go to the daily time frame. What is the trend saying? Where are we facing? Are we bullish or are we bearish? Now, if you observe if you observe here, you will notice that we have actually closed slightly below. Now, this is where mistakes might come in. People might start looking for sales. Now, you need to understand that you need to understand how to use time frames. If you go on the monthly time, if you go on if you go on the daily time frame, just like here, so it is basically bearish because of the structure, right? But if you go on the weekly time frame, it's just a retracement. You see what I'm saying to you? It's just a retracement. Now we can then go to the 4 hour and the 1 hour, or the 1 hour, whichever suits you best, to then catch the early reversal to the right direction, which is to the upside, which is what bullish. You see what I'm saying to you? So right now we've noted that, okay, we've slightly closed below. The daily time frame is giving us bearish market structure. There's something to you now, because you have to be realistic. I'm not going to say, oh, we are bullish on the daily time frame, because no, the market structure states immediately we close below a low, if body close below it, the structure has been broken. And right now the structure has been broken. Now, how do I what do I do from here? It is very important for you to know this, that you can then catch the reversal. The reversal is what I'm saying. You can then catch the reversal to the upside. The only way you'll be able to be settled and know where the market is currently facing is when you then go to the time frame right above, the weekly time frame. If you go to the weekly time frame, we are still bullish, and that the weekly time frame is obviously stronger than the daily time frame. It's something to you. So now we know that on the weekly time frame, it is just a minor retracement, and it was bound to happen anyway. Now we should start looking for entries to the upside. Nobody's gonna be looking for sales. There's something to you. We need to start looking for entries to the upside. And I don't know why you would want to sell GBP USD at any price or at any place in the market when the monthly time frame, the overall time frame, is basically what bullish. There's something to you. So my counter trend line will be drawn like so. And if you see, we've basically touched the counter trend line and rejected it. We're not ready yet. That's what I'm saying to you. GBP USD is not ready yet to give us the profits we desire. We need GBP USD to break the counter trend line. It is a must. Counter trend line is the number one criteria for entry. The counter trend line break is the number one criteria for entry. When the counter trend line breaks, then we can start looking for structures to also break. It's something to, or look for chart patterns that are forming, that we can use as signs, as reversal signals or whatnot. So moving forward, we can see that the GPS is not yet ready, but this will be our first level target just in case. Now, you see how it's bearish on the daily time frame, right? This is what you need to understand, because you need to understand these things. Like you need to be able to, be realistic with yourself, and you need to be able to, try to avoid unnecessary losses. It's something to, because you might think, oh, the GBP is going to rally all the way to the upside, right? And then on Monday the market opens, and then Tuesday, Wednesday it gets here and then plummets, and then it has formed the head and shoulder. You see what I'm saying to you? These things happen in the market, and the market will not just do it overnight. No, it is going to show you bit by bit. It is going to show you reversal patterns even before it reverses. You just have to be able to open your eyes and operate your eyes to be able to notice these little things. Obviously, we are bearish right here. There's something to you. We've broken the structure a little bit. It matters. You may think it does not matter. It does matter. Immediately we body close below the body, the last low body, we are now bearish. And now it is very possible that we could come in here and then form a right shoulder and then plummet to the downside. It's possible. It's something that you. So since we now have that, contingency in mind that that could definitely happen, what do we do? We try to protect ourselves. Then this will be our first level target, our take profit, our first level target rather. In something to you, when we get here, we take majority out, we move stops to break even, and then then we expect it to keep going up. If it does not, and then comes out and take us out at break even, fine, we've made money off of it. We plan for it anyway. You see what I'm saying to you? So it is important to come into the week with a plan. Don't come in don't come in the week blind. It's something that it's going to do you more harm than good. So GPUSD, this is the plan. When the counter line is fully broken, then we can execute buys. Or I would obviously wait for a retest of this counter line so that I can have a nicer entry and a tighter stop loss at the right place. The stop losses are at the right place, but they are just tight. There's something to you, they are tight, and then this will be my first take profit. There's something. So I will explain what I mean right now on the US on the card JPY, what I mean by the tighter stop losses. So on DXY now, you need to understand this, right? The DXY is basically the DSI is the dollar. It's something. This is the dollar index. This should be an added confluence for your trading. I advise you, this should be an added confluence for your trading. There's something to you. If the DXY is not ready to move, the market, the dollar paired against the pounds and the euro, it's not going to move. You see what I'm saying to you? So you need to have the DXY, attached to your chart, because you need this extra confluence. It is very important. I'm telling you, because I'm talking from a place of I'm talking from a place of losses. You see what I'm saying to you? That's where I'm talking from. I'm speaking from a place of losses and corrections. You see what I'm saying to you? I'm not guessing. So it's important that you add DXY, the dollar index, as an added confluence. If it's not at an area of interest where it is expected to bounce off of, even when even when the GPUSD is at an area of interest, has broken structure, has broken cut line, I will still not execute, because the dollar itself, you need to understand, it is the dollar itself, it is not ready to move yet. So notwithstanding, we would continue with our analysis. So for CAD JPY, I'm going to explain to you what I mean by tighter stop loss. Now on CAD JPY, we'll do a top-down analysis as per usual. Let's see where the market is facing. Now, like I said before, you have to be realistic with yourself. Do not lie to yourself. It is very important. The market will not lie to you if the market tells you the truth, because the market reveals who you really are. That's what I'm saying to you. So right now, like I said before in the beginning of the video, structure, market structure. Market structure says when we close below the last low, the body close below it, we are now bearish. Simple. So now we are bearish, and we're expecting this. I was expecting this head and shoulder, pattern that was forming here on the monthly time frame to lead us to the downside, but it did not happen. Why? Because we are coming off of a major area too. You have to understand this. You have to, you have to be able to plot these things on your charts. They will help you. They will save you. They will give you more understanding of why the market is doing these things. Now I will show you a little trick, right? Now you see how where I was expecting the markets to plummet all the way to the downside, because it was giving head and shoulders, right? So it is obviously a no-brainer to expect it to short, right? But it didn't. So what do? I adapt. I am realistic and I adapt. The market is now bullish. I move, but CAD JPY is a B plus setup. It is not an A plus setup like GBP USD that is bullish on the monthly, weekly, and daily. CAD JPY is the B plus setup. It is basically a counter trend, but it's on a higher time frame, so we're not going to get stopped out of nothing. But it is advisable for you to reduce your risk, because even when news impacts happen, we do not actually know where the news will direct the markets to, because why? It is a B plus setup. It is neither bullish nor bearish, but we are trading in the direction that it is going in that moment. That's what I'm saying to you. So CAD JPY, as you can see, you might be confused with these lines, but these lines are basically my entry points. Like I said before, you need to be able to know where you are expecting to execute from, where you're expecting to buy from or sell from. And if you notice right here, on the weekly time frame, we are bullish. Obviously, we've had reversal pattern, head and shoulder and whatnot. Now we are bullish. So now we are adapting. It's something to you. Last time we came here, we were bullish, and then we ended up here. Again, I am expecting. Now you need to understand this. It may not happen on Monday morning. Sunday night, the markets would open, and then the markets can easily do this. easily do this. Boom, all the way to the downside easily. It can, but nobody knows. But what we have to, what we have to work with is the history. What we have to work with is the past, and we're expecting it to repeat itself this time around. It is important to have a plan. That's the plan. The plan is for us to continue to buy the car JPY because why? History is expected to repeat itself as it has come here before. It came, we bounced off of it, we became bullish, and then we ended up here. We came back down. So we're expecting car JPY to what end up here again. That's what I'm saying to you. Now, with that in mind, we go to the daily time frame to see. I need to understand that these levels, I plot them off of the daily time frame, stroke weekly time frame, because it is very important to have these levels premeditated because the markets will not always move in a straight line the way people think it does. What do I mean by in a straight line? I mean by this is what I mean, right? The markets will not always move like this: lower low, lower high, lower low, lower high, lower low. It's swift, it's easy, right? But that is wrong. That's not how the market moves. You see what I'm saying to you? The market does not move like that. The market corrects itself every time. So lower low, lower high, lower low. It could do this, come into this demand level right here, and then push all the way to the downside, and then create a low that that is basically in between this other. You see what I'm saying to you? That this is how the market moves. You see what I'm saying to you? So it is important to have these premeditated levels marked off, off of price action or market structure, and then run psychological numbers. You see what I'm saying to you? Because when liquidity sweep happens, they go into run psychological numbers. You see what I'm saying to you? So I have my, and you can see how respected they actually are, right? You can see how respected they are. You can see how Tap respected it. You see what I'm saying? Most people will be expecting the market, obviously, higher high, higher low, buy off of here, buy off of here. You see what I'm saying to you? That this is basically the blueprint, buy off of here and then we'll keep on going. But that is not how the market moves. The market moves the way it moves, it has moved in the past. You see what I'm saying to you? The way it has moved in the past, that's how it's gonna move now. So what did I do? I was expecting the market to obviously, right? Let me take this off because this is not supposed to be there. I was expecting the markets to obviously, come back in here for me to be able to buy again. You see what I'm saying to you? Or we break and retest here and I continue to buy to the upside. And what did the market do? The market came back into that same price, 105.00. It came back into the same level again, and that this is where we were, which is where we got our execution opportunity from. You see what I'm saying to you? Simple. Patience. It took a while, but you have to be patient. Just have to wait. I'd rather wait for a week and not place a trade, and then be at break even than pursue something and then take a loss for no good reason. You see what I'm saying to you? So moving forward for the future, CAD JPY, we're expecting CAD JPY to break retest 1.08000, which it is already doing. You see what I'm saying to you? Which is it is already doing right now. You can see the fee, we can see the daily, the daily is giving us higher highs and higher lows, but it has not given us a higher high yet. But it is looking like it is about to do that right now. There's something I need you to understand. I am in this trade, but I'm going to show you a little trick right now. You need to be able to refer to the higher time frames. What do I mean by the higher time frames? What do I mean by refer to higher time frames? The same way the daily time frame might, oscillate, correct itself, higher highs, higher low. That's what I mean. Higher highs, higher low, create higher highs and higher low. It is also the same way the weekly time frame would also what create higher highs and higher lows. Now, this is how I am able to predict where the market would end. The same thing to you now. It is important. Trading is all about the history because we have nothing else to predict with but the history. It's something to you. So I will do this, right? I will do this, and then this is where my first take profit is, where the weekly time frame is expected to end. It's pushed to the upside. So when the weekly time frame when the market gets here on Monday again on the 100%, it is going to reverse a little bit and take people out. So that's all for this week. I hope you have a nice week. Ciao ciao.